Thank you very much. Glad to have such a robust and interested audience here this afternoon. And I think this panel will be very interesting because we're going to be talking about how it is really happening in a pretty important sector, financial services. We heard financial services mentioned a couple times this morning, but these two gentlemen are really hands-on experts in this area, both in government and the private sector. And we will try to take some questions at the end, so please be thinking about things that you'd like to hear from about. So let me jump forward here. John Carlson, who is this gentleman right there, is Senior Vice President of the American Bankers Association, and he's got a great title. He's responsible for cybersecurity, regulation, and resilience. I heard resilience mentioned quite a few times here today. The ABA, this little commercial here, represents U.S. banks of all sizes. So they cover waterfront, and so he's got a lot of exposure. Prior to joining the ABA, John served in a number of positions in both government and the private sector. He was the director of bank technology at the Office of the Comptroller of the Currency, and he worked with Amazon and a really cool operation called the Financial Services Information Sharing and Analysis Center. So, John, we're very glad that you're here with us today. Brian Peretti is next to me. He's now the CEO of Everstream Advisors, a firm that helps clients address risks associated with emerging technologies, including AI. Brian recently concluded 22 years at the Department of Treasury at the end as a position of the Chief Technology Officer and the Deputy Chief Artificial Intelligence Officer. He also served as Executive Director of Treasury's Artificial Intelligence Board. And in these areas, he established strategic planning framework for Treasury's IT modernization and oversaw the publication of a recent report on managing AI risks that we're going to talk about a little bit. So, yeah, extremely qualified gentleman, also very loquacious as well. So, we're going to start out with John. John, what are the most significant ways in which AI is currently being deployed by banks, and any thoughts on its effectiveness? And then this was a topic we keep hearing a little bit about, the potential impact on employment in the banking sector.
Great. Well, thank you, Bob. Appreciate the invitation. It's always great to be on a panel with my friend Brian Peretti. So let me just level set a little bit in terms of how AI is being thought about in the financial services industry. First, it's important to understand that financial institutions have been using AI for decades. So this is not something that's new. Generative AI does take it up to a whole new level and does introduce a number of new issues and challenges that the industry is currently grappling with. So when you think about in terms of how AI is being used, generative AI, that is, think of it as kind of the nascent phase. You're seeing banks that are looking at AI for effective risk management, for governance, and the whole host of different controls that need to be put in place, given that there are regulatory requirements around things like anti-discriminatory lending. There's issues with respect to reputation for the firm. There's also risks associated with if the AI tool generates content that is malicious in intent. So what we're seeing right now in this nascent stage right now, knowing that financial institutions have been using AI for threat detection, cyber attacks, been using it for analyzing fraudulent activity and trying to stop that fraudulent activity. They're using it for determining what type of products and services a customer would want to respond to. It's used for call centers, for customer service, to answer questions that customers might have or direct them to people that could be helpful. So you're seeing it in different types of applications, so kind of internal analysis for market research, competitor analysis, business strategy. You're seeing it with customer engagement, with the chat bots. I personally do not like the chat bots. I try to get to the agent as fast as I possibly can, a real person. But these chat bots are becoming more effective and organizations are using them more. Also, quite a bit of use in terms of customer decisioning, in terms of account servicing, underwriting, pricing, and then updating models that institutions have. So I think banks view generative AI as really helping in kind of four major areas. Risk detection, talked a little bit about fraud. We certainly see it a lot with cyber, faster decision making, lowering operational costs, improving customer experience. But there's a huge but here. Banks are very much concerned about data privacy, about overestimation of AI capabilities, and probably the biggest is the generation of biased content. And so that's something that organizations need to have very strong controls in place. So you'll see a lot of banks that are using generative AI, but I would regard them as being somewhat cautious, and they're having to do a lot of behind-the-scenes work to make sure those tools are effective, they're risk managed, they're compliant with different regulatory requirements. And then to Bob, to your question in terms of the impact, on employment. We did some kind of informal surveying of some of our companies, and I think the vast consensus was we did not see any sort of substantial change in employment, maybe some declines in certain areas, but not seeing the wholesale collapse, if you will. But that was about a year ago. Things continue to change really quickly, so we'll really have to see how the applications are being used and how organizations are trying to leverage it and the consequences for different business units.
Thank you very much, John. That's a good overview. Brian, how about from your seat at the Treasury? What was it like?
There, okay. Yeah, so when I was at Treasury, I had a unique role on two different sides. One, I was working on the policy side, but then also the implementation. And I think that was kind of a challenge to figure out how to actually apply what we had been pushing forward and being able to put it in a safe and secure manner. So that became very challenging because what we were trying to push overall may not be easily to be implemented and not as smooth as we may have thought it could go, as any implementation always goes. I think one of the things that we focused a lot on was the employment issue. How is this going to change employment across the U.S.? What does that mean going forward? I think the reskilling of employees is really critical. And Sam Altman was on the Tonight Show last night, and he was talking that there's going to be dislocations. But at the end of the day, there'll probably be more, but different positions. And that's one of the things we have a challenge as I was looking at this issue internally, was to kind of think about, what don't we know that this is going to change going forward? So if you think about like when the internet really started to come about in the early 90s, right? Nobody thought that Netflix was going to be around and delivering videos straight to your computer, right? It was a different way to kind of think about that. So how do you set up the process with enough flexibility that whatever is going to be coming down the line and changing the dynamic is easily be able to be adapted and brought into the environment with the safety and security in the way which is going to keep things running and allow innovation to go forward. The challenge, of course, with that is that changes people's perception internally. And a lot of times that makes people nervous. Am I going to lose my job? As opposed to, can I get reskilled to be able to be doing more stuff? Many people in their positions are not very happy, right? They're not excited about going into work every day because they know they can be doing more, and they complain that I'm restrained. How do you release that bent up knowledge base inside them to say, tell me how to make your job better? And I, as a manager, have to be able to be comfortable doing that. How do I allow that change to occur in a safe, secure environment with the proper governance around?
Thank you. So one place that seems like should be perfect for AI is the area of anti-money laundering. Vast amounts of information, lots of hidden things. Seems like it should be a great thing to pull stuff out and then call it to the attention of people. From your perspective, Brian, Treasury runs FinCEN, so one of your many areas is anti-money laundering. Any thoughts on whether it's being used effectively or whether it may in the future?
Yeah, well, any time we have lots of data, the issue is how do you crunch all that data to be able to find out the not easily identified challenges as they're going through that. And we've seen a lot of times in which you just miss stuff, right? Because either there's not enough data there or there's no way to be able to go through all the data to pull out the things. One of the things that I had been focused on with folks across all of Treasury, not just FinCEN, but other places that had lots of data, was to really kind of ask them, what question are you trying to answer? And how can we use this as a new tool to be able to try to answer that question? And that was a little bit of a different mindset than was before, of which, oh, I just have to be able to get an answer to a question to push that forward. So trying to allow people to look and use this tool, but then also ask them, how do we make a tool that actually benefits you even more? So the parameters with some of the AI offerings may not have been as robust as we needed to be able to mine the data the way we needed it. But then how do we start to work to create agents that can help us go through this information maybe better, while still having the human in the loop to make sure that it's not going down wrong paths or finding solutions that just weren't valid at the end of the day. So that innovation is really something that's going on across all of Treasury to be able to start to solve some of these hard challenges.
Great. Brian, you were involved in a major effort involved a report in March 2024 on managing AI risks in the financial sector. What were the key outcomes that came? Were you surprised about them? And then we'll ask John to tell about his collaboration on that.
Yeah, so under the previous administration, there was an executive order that required Treasury to put out a report, I think it was in 180 days, on how AI is being used by the financial sector. And so what we did was we contacted institutions of all sizes across and among the sector. So we talked to small institutions, very large institutions, insurance companies, depository institutions, securities firms, everyone across the board. I think we got up to about 45 or so organizations. We asked them, what does AI mean to you? And just as one of the other speakers said before me, nobody knows, right? We had 45 organizations, we have 42 different definitions. But that's important because that was what it meant to them. And that's where we saw a lot of interesting innovation and thought, because they were trying to think about how to use it to solve their problem, as opposed to buying something to just address what the vendor was trying to sell them. But we found out some interesting findings out of this report. One was that they did not believe that AI introduced any new risk. It changed the risk that was out there. It changed the way in which they have to manage the risks, but no new risks were out there. We saw that larger institutions were adopting it potentially faster than smaller institutions, but that was just because they had maybe more of a budget to be able to look at that, but they were not adopting it faster. So they were still very cautious about actually using it and implementing it. So they wanted to be able to make sure that they were not going to be upsetting their customers or violating other laws or regulations going forward. They also found out that there wasn't a common lexicon that could be used. So they would be talking to different vendors and they would be saying different things to them. And that wasn't very helpful to understand what it was. But they did understand that this innovation was coming down and they had to focus on how to be able to address that. One thing that we heard a lot was that this needs to be something that the regulators have to be looking in a way which is going to allow the innovation. So many times something comes up, regulators say you can't use that until you're fully comfortable with it. But AI was still so new at that moment, a year and a half ago, which seems like ancient history in this space, but that they said, we need to partner with our regulators early on to be able to draft the regulations that work the right way. But also they have to figure out better and different governance models. How do they make sure that they're able to actually understand how it's being used, how it can't be used within firms, to be able to make sure they're sharing that information. And they didn't want it to overtake the customer experience, right? As John was saying, chatbots are really good, but at the end of the day, you still need to be able to have somebody they can talk to so that they have that personal connection between the firm. This led to a series of work streams that were created in the public-private sector to be able to start to address some of the challenges. And from that, they really deepened the, I think, connection between regulator and regulatee, as opposed to just saying no. It allowed them to have a conversation about how it's being used and how it could be used better. I'll tell you, it benefited me quite a bit because when we started to get more information on how firms were using it, we were then able to understand how to better deploy it within Treasury itself. And that made a much easier thing because we were not starting from scratch. We were building on the lessons learned from others and be able to share that information back and forth.
Great. John, can you give us the private sector perspective on participating in this?
Yeah, so I think it's helpful to maybe step even a little bit further back than where Brian went. Was many years ago, really after the 9/11 attacks, there was the creation of a public-private sector construct. It's still very active today. Brian has been a huge leader on the public sector side. I've been very involved on the private sector side over the past 23 years. And this kind of public-private sector organizations, one is chaired by Treasury, another one is chaired by a senior executive from the financial sector that rotates every couple of years. So we leverage that framework that we've been using on, addressing cybersecurity risks, on conducting exercises, on, responding to major events, whether it's a natural disaster or some sort of targeted cyber attack, and use that as a way to kind of do a deeper dive into looking at how this emerging technology could be used in dangerous ways to the private sector. So when Treasury, with this executive order from the Biden administration tasked with writing this paper, we then jumped into action and started really intensely collaborating with the Treasury Department. We convened, and when I say we, I was stepping in my role when I was the co-chair of our Sector Coordinating Council's Research and Development Committee. So we started convening a series of meetings with executives from the industry to really drill down, how are they using AI, what were the risks, how are they mitigating those risks, what should we be focusing on going forward. And all that work kind of culminated in a very kind of brief summary document that then was incorporated into the report that Brian had mentioned, that really identified a number of different issues as well as calls to action, so to speak. The issues and calls to action were around, making sure institutions refine their cybersecurity strategies to deal with the emerging generative AI threats, making sure that you're prioritizing the adoption of AI models for fraud prevention, preparing for sophisticated AI-enabled attacks. They are going to continue to evolve over time. Strengthening risk management protocols with a huge emphasis on what's the right risk management framework. National Institute of Standards and Technology had come out with its AI risk management framework, which was great. People were starting to use that. They thought very highly of it, but then thought, well, we really need to customize it and make it very specific to the financial services industry, which is another work stream that has been launched in response to that. And then the other one was making sure the industry collaborates in developing standardized strategies for managing AI-related risk. And that led to a lot of conversations around third-party risk management, which we haven't really talked about yet today, but that's a huge area in our industry because so many of the companies that financial institutions rely upon are integrating AI in their products and services. And these are oftentimes black box operations. It is not clear what's the data set, what's the provenance, whether or not you can explain, the outcomes of the results, things of that nature. So we really thought we needed to lean in more on the third-party risk management. And then the last one was just the importance of investing in people, that you're going to need a next generation of practitioners and leaders that are going to help guide your organization, manage the risk, but take advantage of the capabilities because the marketplace is going to be dynamic. And if you're not innovating, and using these technologies, then you're going to become obsolete and you're not going to be in business. And then the final one was really more directed at the regulatory agencies that they already had a body of work around things like model risk management and requirements around cyber and fraud and third-party risk management. But there needed to be kind of clear regulatory outcomes and objectives as the regulators were thinking about how they would supervise institutions as they use AI, generative AI in particular, more intensely. And then the other thing I'll just mention really quickly, Brian mentioned the Biden administration's AI executive order. That was over 100 pages long. I mean, it was probably the longest executive order I've ever seen. And it was heavily focused on safety and security and preparation, the workforce-related issues, hence the reason why it was so long, and also about how to utilize AI within the federal space. When the Trump administration came in, they rescinded that executive order, and that order is much shorter and very focused on kind of expanding the use of AI and the United States being a leader in the space, and was very much less, if not silent, on some of the security and safety related issues. So that's a real shift in direction from the top of this administration. And so that could create some challenges for our industry in terms of rapid adoption, promotion of AI, but neglecting some of the security, safety, and protections, which in my personal opinion, we've seen this movie before where technology companies want to go and move fast and break things. My industry is one of those industries that's left holding the bag. And we bear the liability in protecting the customers. So we have a lot of concern about how technology is advancing and making sure everyone in our ecosystem is adhering to similar expectations and rules around consumer protection, financial integrity, and financial stability. Those are all areas of my industry that are at the root of trust and safety.
Just to mention one other thing. So the report that was mentioned, that was produced under the executive order. Since that executive order has been rescinded, the report is no longer out there. I mean, if you need a copy of it, please don't hesitate to ask me or John. We'll be happy to send it over to you. But on the other hand, the report is now about 18 months, 19 months old. And it, I think, shows its age a little bit, just because things are continuing to evolve, right? And so will they have to have that conversation again? This is one of my hopes that has happened, continues to happen, in which the public and private sector continue to talk about it, to identify what's changed in this period of time. Are those findings still the same? Has something changed going forward? Or how do we build the right work streams, right? We have to continue to evolve to address the challenges of today, not something we saw a while ago.
Super. So Brian, Treasury sits at sort of the top of a pyramid where every time a financial crisis happens, people get unhappy and lose money and jobs and so forth. So AI could win a prize if it was able to spot what people seem to miss until after the event. So like first payment defaults in 2008 or underwater securities in 2023. Does generative AI have a possibility to yell and say, hey, watch out for this, because you're missing it right now?
You know, this is one of the challenges, I think, with generative AI and AI generally, right? It's really backwards looking. So if you think about it, it reminds me a lot of times if the way you always hear about when countries go to war, right? They always fight the last war because that's all they know, right? And what are the new problems that are coming about that they just may never have seen before? So how do you set your radar to be looking for stuff that you've never been concerned about in the past? So, you know, mortgages being underwater, right? There was the famous comment by Alan Greenspan, there's never been a nationwide housing recession. Of course, then there was, right? Because nobody thought it was possible. So, you know, this gets back, I think, to one of the previous speakers who was talking about data. Do we have enough data to be able to do this? My concern always is that when we look at creating artificial data based upon previous data, we're just reinforcing the same negative lessons in that space, right? Finding out, you know, getting regular data AI ready costs a lot of money, but is going to be needed. And what we've seen is, you know, I'm not a big fan of any models, just because they're always going to fail, because at the end of the day, there's not enough information to be able to make the true model. So, for example, last night, anybody who watched the football game, for the first time ever in NFL history, a quarterback had both an interception and a fumble on the same play, right? Now, if you had put that and asked AI if that's possible, it would came back no, because there was never an example of that, right? So it could never be identified, right? So how do we make sure that we're understanding what we're creating, looking for stuff, but then also looking for different things that may be indicators that just weren't well managed in the past? So for example, right, for the underwater securities, we put in buffers now to start to look for that and be able to raise that as an issue so they can't get out of control, right? So you put a buffer around that side so you can't have that problem anymore. But that just means there's going to be a problem somewhere else that's going to cause the issue, because there will be bubbles, and they will occur, they will burst, and we'll have problems. How do you identify that, right? We don't have that much information, right? And even in the stock market, we have, what, about 200 years of information out there, and that's still not all the things that could ever happen, right? We see this in even larger data sets, right? The weather forecaster gets right, what, a day and a half out? Maybe they get the day right when they look out the window, right? So that becomes a challenge. So in the financial sector, one of the things we've always thought about is we have models, but we then have humans, right? And how do we make sure that humans can override the model when the model's not giving out the right information based upon the knowledge that people have of that's just not right? That just becomes, but can it be a tool to help identify areas to start to do more investigation? That's what is really important, to be able to spot stuff, but also knowing it does hallucinate, and sometimes it just gets it plain wrong.
Okay, well, it doesn't sound like it's going to win the prize, Brian. I'm sorry. Explainability was mentioned earlier today, and in the financial institution context, I think comes up two ways. If you start using AI to run your business, you understand why it's being run the way it is, and that's a big business issue. And secondly, in dealing with consumers, do you have problems in the way you're treating consumers because of any number of biases or other issues? And then Brian just mentioned the H word. So if you're depending upon something to be making adverse actions and it's hallucinating, maybe thinking somebody had a lot of bankruptcies when they never had any. So, gentlemen, what's your thoughts about explainability in the financial services sector, where it's a lot of decisions are being made in this way?
Yeah. So when Treasury released that report, one of the things that happened was the sector then started focusing on different aspects of use of generative AI and what sort of controls need to be put in place. So there are 5 different work streams that we're in the middle of. Some of us are near the tail end of it. One of those is focused on explainability and nutrition labels. And the focus of that work, which hasn't been released yet, but has been the subject of a lot of meetings and discussion amongst industry practitioners, is to think about, what sort of framework do you need to have in place to ensure that you can explain what the model is generating, what the source of that data is, so that it is explainable from a risk management perspective to various stakeholders, whether it's the board, whether it's the regulatory agencies, other parties that are out there. And this is not the work stream I'm leading. I'm just kind of a part of the working group. It's actually being led by a colleague that works at the Bank Policy Institute, Chris Feeney. But there are several different components of the work that they're doing. They're relying pretty heavily on 5 different disciplines. First is on governance and risk management frameworks. So we already mentioned the NIST AI risk management framework. There's another financial services oriented framework that is very close to being finished. It's being run by a group called the Cyber Risk Institute that is a part of the Financial Services Sector Association world. The second one is on data governance criteria. The third is on enhancements to prompting guardrails. The fourth is assurance and testing methodologies, and then ongoing risk monitoring and outcome analysis. So I think in this paper that's being written is a pretty lengthy one and goes into quite a bit of detail that I think will be really useful for industry practitioners. And it may also be useful for regulatory agencies to understand what the industry is doing, and then they can write whatever sort of supervisory guidance or regulations that basically leverages the good work the industry is doing in terms of managing and being able to, quote unquote, explain, what the results of the models are and what the basis is.
And explainability is just another risk that firms have to handle on a day-to-day basis, right? Every time you make a loan, you hope they're going to pay. You hope you made enough due diligence to understand what it is. So you should be able to make an informed lending decision or any kind of other kind of decision a financial institution has to do. So the key here is really to make sure firms understand how they're using a tool, right? And being able to figure out how that fits in the overall risk management process they're doing to be able to make that. Do you rely on one person to do it? I mean, it's been a long time, and since you shake your hand and you say that's all, and I'm going to trust you're going to pay back the loan, right? We're much more sophisticated than that, and we now are adding this as another layer, another potential area to be able to look at, to be able to understand what's there. But it won't be the solution and be all end all. It has to be a better understanding that it can fail, you can have solution hallucinations, but that with the proper guidance and processes around that, that will just be one other factor that you'll have to take in while making that decision.
Thank you. John, a number of years ago, I had a potential data compromise, and the institution I was working with got me enrolled with their voice authentication system, and I said, this is great. For the next 30 years, I don't have to worry about being compromised when I call them up. Should I be worried now?
Well, Bob, when you pose that question, my first reflex is you shouldn't be concerned because your institution is on top of it and is going to protect you. That is a very
It's not a bank, by the way, John. You don't have to say.
Okay, very good. I don't have to represent the industry on that one. I will say on the positive side, the industry is really active right now in terms of monitoring these types of threats. We are seeing some changes in terms of how AI is being used to defeat or undermine widely used authentication practices. I think some of the voice recognition software is becoming less and less reliable. Even the SMS, texting, the second of their multi-factor, that's becoming less and less effective. We're seeing generative AI being used to impersonate people. We're seeing early signs that agentic AI can be used to conduct account takeover. That has prompted the industry as part of this, public-private collaboration to really focus in on identity and authentication. And it's a complicated project in the sense that we rely very heavily on the various governments, whether it's state or federal, to issue credentials that we use as an industry to verify a person when you open an account and to authenticate someone to conduct a transaction. So we need effective ways of validating that John Carlson is who he claims to be because you've got a government-issued credential to back it up. So it's led to some work that we're very close to releasing that is basically two different papers. One paper identifies various different attack types that generative AI is being used to target identity and authentication systems. And then the second paper is highlighting some policy recommendations where we believe the federal government and states could be immensely helpful in terms of providing additional tools, access to information to validate who individuals are, and to modernize, because we're moving very rapidly to a digital economy, a digital ecosystem, and we need to have digital credentials, not just the paper-based ones that we currently hand over when we get to the TSA line, or you walk into a bank and show your real ID identification or your passport in order to open up an account. So that's something that we're working on. Hopefully we'll have something to talk about more publicly in the next few weeks.
And I think this is one of the things that's always been interesting in the financial services sector is that innovation is always a driver to get there, right? So, when they first robbed the first bank, back in the 1400s, because that's where the goal was, right? We continue to see the evolution to be able to identify better ways to be able to make sure that you're safe in dealing with your financial institution. Right? I remember way back when you used to have passbooks, right, which you would bring in to figure out how much money you had in the account. The challenge we have, right, is at the end of the day, you have to make this as seamless as possible. If you make a person go through a 22-step process to be able to get access to their account, they're not going to bank with you anymore, right? They're going to want to be able to find the one who has the least amount of friction while the greatest amount of security. So even when you were talking about voice authentication, right, that was only one of many layers that was being used, right? And so, but you never saw the other ones. You just saw the voice, right? So how do we build that out and be able to figure out what's best? Understanding every single day the criminal's sole job is to figure out how to breach the financial institution to get the funds that are in there. So it becomes a difficult game of cat and mouse, but it's critical that we continue to innovate to be a winner on this side.
And just fun fact, the ABA was formed 150 years ago in response to bank robberies.
Really? Wow. Okay, Brian. A critical element in this conversation is governance, okay? So I'm going to give you a governance example, and you can let me know whether you think it was good or bad. New York City put up an AI chatbot and told everyone this is the way to find out what you need to do in New York City. And it was producing illegal, immoral, and wrong answers on a routine basis. And at a press conference, the mayor of New York was asked about this and were they going to take it down. He said no, people could just write in and say what they thought was wrong. And then I guess the lawyers got involved, and then they put a disclaimer up saying don't count on anything that this chatbot says to you. So how does that rank in the AI governance process strategy level?
That's pretty much a failure in every way. But I think this is the challenge we have, right, is out there is how do you create a structure that actually understands what you're trying to achieve while giving the flexibility to be able to address the challenges you're trying to overcome. And this becomes a big issue with new and emerging technology where nobody understands that. I like the last presentation with the discussion of what a CIO should be doing. And I think when you take it to large, broad parameters, that's very helpful. But when you try to drill down to the individual actual applications, it becomes very difficult, right? You do not want to be calling up the IRS with a complicated tax question and be getting told 7, right? It just doesn't work. So how do you make sure that you understand what the limitations are? You put in those buffers to be able to make sure that it can't go down the wrong path, understanding that there are people who are going to just try to trick the system into doing something differently. But the key for, I think, the governance model is to make sure that everybody across the organization knows what can be done and how to be able to share information. Because once somebody learns a lesson in one place, it can't just be stovepiped. You have to be able to figure out how to be able to share that information to other places so that we're going to be able to make a system that will be better and be able to deliver the needs that are coming from whoever your customers are.
Thank you. John, a lot of things have been tumultuous this year, and in this area, in cybersecurity, there's been a lot of tumult. We lost Brian as a public servant, and that's number one. And then the Cybersecurity Information Sharing Act is hanging on by a thread, and there's been an upheaval in the personnel and all these key agencies. So, you know, you guys must be freaking out at the ABA about this because you depend on them, don't you?
Well, let me start with the positive before I go to the negative. So the positive is we actually have really strong organizations that we share information about cyber threats, vulnerabilities, and incidents. So the FSISAC organization I worked at for 5 years is one of those organizations that we rely upon extensively. Second positive note is Brian's old organization really still serves as the focal point for how we engage with the public sector. Treasury then reaches out to other parts of the government to troubleshoot, address issues. They have also developed a number of services to provide information to financial institutions about threats, about vulnerabilities, how to mitigate those. So those are all positive things that we have that are kind of foundational. On the concerning side, if you will, we have seen some significant changes. There have been probably a 35% cut in staffing at Department of Homeland Security Cyber and Infrastructure Security Agency, CISA. You had mentioned a law that was passed 10 years ago that provides liability protection and antitrust and privacy protections around the sharing of information among private sector entities and with the government. That expired on October the 1st of this year. It lapsed for the period of the government shutdown. It was included in the continuing resolution. So we have a temporary extension that will last until the end of next month. But we have dysfunction in Congress, and it's really hard to get legislation that is truly bipartisan, in my opinion, totally non-controversial, getting it passed. There also are a lot of vacancies in pretty senior level positions in the government. The National Security Agency and Cyber Command, those are still unfilled positions. The head of DHS's Cybersecurity Agency, I mentioned, that position is still not filled. The candidate that was put forward, or the nominee that was put forward, has not been included in the legislation, so his nomination may lapse unless the administration wants to renominate him again. And we're still waiting to see what the administration's new cybersecurity strategy is. Add to that, you've also seen a pretty substantial reduction in staffing at the regulatory agencies. Some of those are hitting the functions that are focused on cybersecurity and operational resilience. That includes examination of not only financial institutions, but also dozens of major service providers that are critical to the financial sector. So hard to know like what the direct impact of that is, but I think my assessment is that it is less. And so the question is, does less equal, you know, some sort of increased probability of financial crisis and ability to respond to a financial crisis? That to me is a bit of an open question.
Silence.
So I think, you know, one of the things, you know, over time things grow, and how do they get realigned the right way? And so one of the things that is, I think this administration is trying to do is trying to figure out what's the core, to get back to the core to be able to build that through. I think everything John has pointed out is the core. And how do we make sure that that core continues to operate? But there were some, you know, some things that I think, some processes that may have been going on that may not have been as helpful and caused some challenges. So I think, you know, there was a lot of regulation that popped up in the last administration that may not have been as overly helpful as could be. It could be better well tailored. So how do we kind of address the core of what we all know has to get done and get rid of the fluff and the excess that may not be maybe holding us back in some way. So I think that's part of the challenge we have in this space of right-sizing everything to the right space.
Thank you. Well, we welcome any questions. So you guys are all still erect and listening, so we are very excited. I see a hand back there, and then we'll take that gentleman here.
Hi there. Can you hear me? My name is Dr. Fatina Al-Masri. I work with JP Morgan last year with AI and etc. But this is one of the examples. But I work as well with the FDIC, and we did anti-money laundering, and actually I did anomaly detection model in AI. However, I did not use real data. What do you guys do for the real data? You know, like, you know, how you encapsulate this so it will not be going through the crack for cybersecurity? That's the first question. And the second question, how you will be able to encapsulate it so it will not give you the hallucination? What does it mean the IRS is not knocking on somebody's door who is innocent and they find it in the model that is guilty?
Yeah, so to get to your second point, before the IRS knocks on your door, there's a lot of checks to be able to make sure that the information that's coming through is actually valid, right? And we have a whole system to be set up for that. To be able to make sure that to the best knowledge possible, is that if you're a tax cheat, IRS is going to find you to go forward. Digging down on information is just a challenge at the end of the day.
Yes.
I guess your question is, are you using real or fake data? Was that what you were asking?
Real-time data.
Yeah,
Because real-time data you have to encapsulate.
So that's part of the problem that exists overall, right? You file a SAR, which is what, 30 days after which the thing is identified, which then gets processed at some point, and then who knows how long that takes, right? The challenge, and I think this is a problem we have with data generally. You're, not you personally, but you as a financial institution are probably looking at this as a compliance function. I have to do this report, I will do it, and after I get done, I'm going to put it in the file cabinet, I'm never going to look at it again, right? But that's actually a good data point for your cybersecurity people, for your anti-fraud people, for your tellers at the end of the day to be able to use that. Are we using the information in the right way?
Yes,
In the old governance structure was that I did compliance and that's my job and I'm done after I did that thing. And I've talked to people on the anti-money laundering side and the cybersecurity side, they just don't talk and it's not helpful. So how do we break that down to be able to get there? Because that data is actually helpful. And if we just think, compliance is a loss function for an organization, right? They find no value in having a compliance function to a large extent because that's just costing them money. Yes. Can we change that dynamic around to say, no, that's an actual operational efficiency role to be able to make us better, to prevent the bad things from happening, to identify what may be going on, to make the system more robust. If you look at compliance in that function, in which, sure, I had to write the report, but it's still being used across the organization, and AI can be very helpful in that space to be able to do that. You can see that it may not make you money, but it will definitely reduce the money, the cost, and hopefully make your process even better. That will make you money because you'll be able to guide the process through in a more efficient way than you have now.
I think we have time for one more question before they play the music.
So I was actually an omnibus model risk officer at Capital One through the financial crisis. One of the things which worked very well through regulators and industry interactions was the SR 11.7 OCC 2011-12, right? The model governance framework, which is still standing, right, as it was in 2011. Do we see anything like that for AI? Because AI is kind of, arguably an order of magnitude more sophisticated, more expansive than the models which were there in 2011, right? So any thoughts on that? Will we ever get to that point?
So I don't know if there's anything going on with that right now. I don't know, John, if you know, but what I would suggest is that it sounds like you and others may have thoughts on how to make that better, right? And so there's two ways to do this. You wait for OCC or some federal agency to put it out, or you work with other components to be able to set that up, as John mentioned, the PHYSIC and other organizations, to then create that as the industry standard, then hand it over to government and say, this is how we're going to do it. I think in this space, in the conversations I had in the past, was that the regulators didn't know how to answer it yet. And they're looking for that partnership, which in many other places, right? In the financial crisis, there wasn't a partnership. The regulators are going to tell you, because maybe you didn't mess up, but so many other firms messed up, they had to come down and tell you. And that becomes a little draconian. But you can imagine this space of what is the right thing. And we see a lot of that work going on across industries and different industries of trying to create the right model frameworks and governance models to be able to then say, these are industry best practices. Government, you just have to accept it, that this is the right way to do it. You can, we need your input, but it isn't something where government tells you how to run your business that you can then tell you and and if this works right, and this is one of the things John mentioned, the third-party risk is incredibly challenging, because at the end of the day, you don't know what the third party is doing.
Right.
Using your economic power to push onto your vendors to say, I'm not going to hire you unless you have this framework in place and can answer the question is going to be very, very powerful, because hopefully that removes some of the mystery out there that they don't want to tell you how they're doing stuff, but now you know industry best practices, how they have to run, and hopefully makes us more robust.
Is this something relevant for BPI, for example, or for about Bank Policy Institute? Or
Yeah, I think ABA would probably be interested
ABA,
too.
yeah.
I don't know.
Yeah.
But
I didn't hear the first part of what you said.
Getting to
BPI,
the equivalent of 2011-12 for AI, is that something relevant for Bank Policy Institute or ABA?
Yeah, I'm not aware that the agencies, the three federal banking agencies are rewriting that. I imagine they are thinking about it in the context of how AI is changing things. You're also in a period where there's just tremendous amount of change, within the regulatory agencies. They're looking at capital requirements. They're looking at the third-party risk management. They're looking at cyber-related issues. So, and also they're thinking about like some of the more recent incidences, like the Silicon Valley Bank, liquidity-related risk issues. I think they're mindful of how mis and disinformation is impacting reputation. So, and that's something that also generative AI is a contributing factor to. We didn't really talk about it in this session. So I think it's in the mix of things. I don't know if they're going to come out with something that's like, hey, here's our AI, policy around model risk management, third-party risk management, cybersecurity, fraud, AML. I mean, I don't know if they would be that kind of bold in terms of some sort of an umbrella approach. I think what they'll probably do is go through each of them and make tweaks to them to recognize how AI is, impacting those types of functions or activities or risk management expectations.
Yeah. My thought would be, don't wait for government to do it. Reach out to your trade associations, reach out to your partners out there to figure out how to get it done, to be able to make sure this moves forward. Because, a lot of times what comes out at the end of the day from a regulation or something may not be as helpful as you, as the expert, know what needs to get done. You, as a practitioner, knows. Most folks in government, nothing against anybody in government, but they aren't running systems, right? You are, right? So start to have that conversation with your trades to be able to start to say, here's what needs to get done, and that should hopefully get us to the right place at the end of the day with best informed information as opposed to guessing how things happen.
All right, many thanks to Brian and John for lending their expertise. And also a shout out to JP, who is a true Renaissance man. He not only now is a financial services expert, but he understands all the things that you guys say that I have no idea what they mean. So JP, thank you so much for sponsoring this.